morning, everyone. This is Financial Literacy 101. And today we'll be doing a stock review on Cleveland Cliff. I think there's money to be made, quite frankly. I'm not going to bore you with a bunch of ranting, but I will let you know there's money to be made with Cleveland Cliff nonetheless. Let's get into it. All right. So Cleveland Cliffs for 5 years, for 5 years, they've been up 193%. The past year, they've been up 16%. The past 3 months, they have been up 40%. The past month, they've been up around 34%. The past week, they've been up 9%. And today, they're already up close to 2%. So your question already is, should you invest in a stock? In my opinion, I believe that you should. And don't wait. As you notice, I bought 5 option contracts at a value of 120. And my total return already, this was today before the markets opened, I'm already up 26%. I know a lot of you guys get mesmerized and distracted by the dollar amount. Again, I keep telling people, focus on the percentages across your whole portfolio. That way, you know at the end of the year what your portfolio percentage has been. Believe me, if you're up 20%, you're doing absolutely phenomenal because most investors don't do no more than 10%, depending on what they're investing in. Because I know I went very, very safe. I went very, very solid in my investment portfolio when I kind of put all my money out and I threw it in Vanguard and I went into strictly index and ETFs fund. But again, when I looked at last year's profit margins, I'm like, man, I'm only around 10% plus 2 or 3% inflation. So roughly 7%. That has been the trajectory of the stock market over the course of its history. I can do better. I know I can because I know other investors who are doing 20, 30, 40% year in, year out, regardless if the market is down or the market is up. Now, granted, look at where I'm at now. I'm already up 31.58%, 31.58%. All right, I'm going to move on. We'll get back to that. Cleveland Cliffs, also called, is an iron ore mining company. It supplies iron ore pellets to the North American steel industry from mines and pellet plants located in Michigan and Minnesota. It operates through the following segments: mining and pelletizing and metallics. The mining and pelletizing segment owns operational iron ore mines plus indefinitely idle mine. The metallic segment constructs an HBI production plant in Toledo, Ohio. The company was founded in 1847 and is headquartered in Cleveland, Ohio. The listed name for CLF is Cleveland Cliffs. All right, the CEO is that gentleman whose name I'm not going to say because I don't know how to pronounce it. Employees, around 2,400 roughly, founded in 1847. As you notice, they have 3.08% of dividends, and we're looking at the 52-week high and 52-week low. So in a matter of a year, they went up to from $2.63 to $9.02, and they're currently at, if we look at it, they're at $8.16. So there has some market correction where down here there was at $8 at $8.35, and they already ballooned up. Okay, so they're roughly right now as we're talking live. This stock is already at 2.25, so it's blowing up before your very eyes. And as you can tell, my options, I'm already up over 25%. Let's carry on. The related collectibles: Ohio Materials and upcoming earnings. The analyst ratings: buys at 25%, hold is at 63%, and sell is at 13%. Okay. All right. Quarterly earnings, as you can tell. Going back to Q4 2019, they were up with a slight decline. I want to say about a 15 decline of a declination. Q1 2020 and then Q2 2020, they continue to decline, and then boom. Right now, ladies and gentlemen, I believe it's tomorrow. Let me get into this very quickly so we can get that information. Let me let you know about this. Yes, so tomorrow at 10 a.m. Eastern, so my time will be 9 a.m., they're going to go over their their third quarter earnings. And let me tell you, this company has been doing phenomenally well all of a sudden. Don't know. Maybe people are putting up tons of iron fences. I don't know. But nonetheless, you can actually be a part of these. Every now and again, I go on quarterly earnings call to see the trajectory of a company. I know last year when Amazon raised their price per year to 120, 119, but 120. I was part of that earnings call, and I already knew that it was going to go from $100, $100 to $120 because of their services. And then their stock shot up from that point. So these quarterly earning calls are another analytical tool, believe it or not, because they're going to talk about 30 to an hour. They're going to go over it very brief. They're going to give out their earnings. And then from that point, you're going to see the stock take off even more. So my option trade does not end until next week. But again, we'll get into that. All right. People also own, as you can tell, here are my 5 contracts. People also own Ford Motors, Marathon Oil, United States Steel, and GE. Okay. I can understand how some of these are related. Okay. Nonetheless, let's move on. So Market Watch, we're Market Watch. Basically, we're just going to look at a couple of things. We're going to look at past performances. Year to date, unfortunately, this company looks like they've been down 3%. But again, this past year, some companies are just blowing it out the water with COVID-19. I am just astonished. I just have no clue of what's going on with COVID-19, that some companies are doing tremendously well. As you can tell, the last 3 months and then the last month, they're doing roughly to 42 to 43%. That is phenomenal. Okay. Let's see what else here. We already went over their 52-week range. They're a company that's operating slightly out of profit at only 7 cents EPS, and their dividends, they're giving out 6 cents per stock. That's measly. That's worthless. Okay. Let's move on. Now, I'm gonna blow this up for you guys to see. I think this is very important. This is coming from Yahoo Finance, okay? Yahoo Finance. But again, this is one of the tools I gave you guys yesterday was Zacks, okay? I like to call it Zacks buy rating, even though Zacks is an analytical tool that you can go to that can kind of give you stock information, quarterly earnings, and also buy, strong buy, hold, and sell ratings, okay? By letter grades, A through F. But nonetheless, this is what Zach is, estimating for Q3 for Cleveland Cliffs. It says Q3 sales estimates. The Zacks consensus estimate for third quarter consolidated revenues for Cleveland Cliffs is currently pledged at $1,606 million, which calls for year-over-year rise of 188.8% and sequential growth of 46.9%. Okay, what does that mean? They're doing good. Plain and simple, the company is doing phenomenal. That's really all what it means, ladies and gentlemen. I'm not going to bore you with a bunch of stuff. Now, I also want to give you an update about another company. Let me show you my portfolio very quickly. I should be up, and it looks like I'm down. Why is it green? Okay, Robinhood's slow. All right. But it's saying that my stocks in Cleveland Cliffs are up, but I don't see them listed here. Okay, I only see them when I pop up Cleveland Cliffs that they actually posted. They actually posted to my own portfolio. Okay, I see it here that I'm up. Here are my 5 contracts. Today's return is $25 off those 5 contracts. And as you can tell, this morning I bought these options. So this is my position. Okay. Average cost per share is 19 cents. Cleveland break-even price is $8.69. But it says right here, my cost was $95, but my market value is $120. So I'm already making a good amount of profit according to my percentage again in that particular contracts. Okay. Let me move on. But let me show you this very, very quickly. I think it's PLTR. Yep, PLTR. Now, this is an update to this particular stock that just came out, I believe, last week. I want you guys to take a gander at this, okay? Yeah, I want to do this. Yeah, September 30th. So it's been out almost a month, so not last week. Something very important has happened with this stock that I think that is driving it down, but I believe that it's a ploy for people to get in low to make a large sum of profit. There's something that the CEO did that is very unconventional when it comes to an IPO releasing within a month and then what the CEO has done. The CEO didn't quit. He didn't die. But he does something very, I don't know the words. I don't know what the words to explain it. It's kind of like he he has decreased his position in his own stock. He sold 7% of this stock, okay, for what I would call a measly profit, okay? Let me show you the story. Now, today, the stock is up around 1%. The cost of mine was $54.46. I have shares of almost 6%. I'm going to invest this $5 very quickly. And I'm going to tell you why I'm going to buy more of this stock in a second here. I don't like to see money just sitting around, guys. I want that money to be invested because that is money to be made. There's money to be made. Okay. So I've only made 43 cents, but I'm not worried about it. This is a long-term investment. So let me go to this story very quickly. Let me read this to you guys. Let me get rid of this caption very quickly. Okay. I'm not going to read this whole story. This has come from Forbes, but I'm going to read these last two paragraphs. Now we're talking about Theo. Let's go back to the CEO's name. Okay. Blah, blah, blah. Where is he at? Where's this guy's name at? All right. Karp. That's his name. Karp. Okay. That's who we be talking about. Now, I'm read from here. Karp, who is the CEO, I'm just going to call it Powell because I keep butchering the name. Karp, who is the CEO of Powell, sold 14.1 million shares or just under 11% of his stake for $135 million. Now, these guys are billionaires, so $135 million is still a lot of money, but why is he selling 11% of his stake? Now, after taxes, he has likely netted about $103 million. This is a significant chunk for a CEO to sell, during and within days of a company's IPO, though Karp had earmarked around 20.5 million shares that could have been sold at the IPO. Per the company prospectus, a sale that would be worth nearly $200 million pre-tax. A contrary founder who has previously called wealth culturally corrosive, Karp is just worth over $1 billion according to Ford estimates. Theo, meanwhile, has sold 27.35 million shares in the past week, or 7% of the ownership stake under his name in the prospectus. Although Theo was listed with nearly 330 million shares of Powell before offering, Forbes estimates the almost half of those shares belong to outside investor in his three investment firms: Founders Fund, Trillium Capital, and Mercurial Capital. This means that while documents with the Securities and Exchange Commission show he has sold 279 million pre-tax worth of stock since Powell listed last week, Forbes estimates that after applying taxes and taking out what likely went to his investors, Theo's personal take is closer to 103 million. His estimates net worth, which also includes real estimate and past equity sales, including shares of Facebook, is just under $2.5 billion. The IPO for this 17-year-old data mining company, which counts governmental agencies like the Department of Defense, the CIA, okay, the Central Intelligence Agency, and the Immigration and Customs Enforcement, we all also known as ICE, as its clients. These are the clients of Powell. Was long anticipated. However, many investors reportedly had technical issues selling their shares during the offering. This was after the company had already pushed back its listing date twice and filed 7 amended prospectus before it finally went public on September 30th. Now, after reading all that jargon, you're saying, what does that mean to me? Well, let me break it down. The CEO sold all these shares and made a large profit. Now, to us, very, very large profit, but for him, he kind of just shaved some money off the top. 103 million to be shaving, which is, like 10% of $1 billion, which is, good sum of money. But why would he do that? Why would he sell 7 to 11% of his stake inside of his own company to put it back into the market, which, as we know, right, has driven the cost of his stock down. Why would he do this? Now, I want you to think about this. The stock was released at $10.15. Then it got released. And by noon, it was at $10.61. Okay? Then October 1st, it dropped down to $9.31. Then it dropped down again on October 5th. So all within a week, like I said, in a couple of days, he sold. So the price, has driven down. So he sold all those shares, okay? And that was on the 5th. Then on the 7th, the price hikes back up to $10.38. And now we're showing a lot of volatility. I'm not going to say that he short this stock purposely to drive the price down, to have mega investors invest inside the stock to, once again, drive the price up. But this will occur. Sometimes, I'm pretty sure the SEC is looking into this. I'm pretty sure. Because what these guys can do is sell a large stake of their own investment inside their stock, which drive the price down. Then, in a matter of a month or so, they will buy more of their shares at a lesser price, showing that this stock is undervalued, which then drives the price up and makes the evaluation of the company boom. Some of you are like, is that illegal? Yeah. There are certain federal guidelines when it comes to investing that certain companies can't do. I don't know the time limits. I didn't dive deep into it, but on the surface, I'm surface speaking. This is from an opinion of mine. This is me looking at this very objectively. I'm looking at this very objectively, and I'm like, why would a CEO do that in the first week? This is very, very unconventional for a CEO to do something like this. But let me see what you guys are saying in the chat. Guys, I have my link in the chat. If you want to join me here, just click that link. Just click that link. If you have anything you want to comment, either about Cleveland Cliffs or you want to comment about Powell, okay? You can use your video or without your video. We got Wendell in the room. Thank you for the thumbs up, brother. I appreciate that. We have 187 in the room. Good morning to you, good sir. He said, I bought Cleveland Cliffs at $5.50. Very good investment, okay? I'm holding on for a while. Looks like we have Miss One in the room. Peace all. And thinking about buying more. Well, as I showed you guys before, I bought options in this particular stock. Let me get back there to show you the options I bought. I don't know if it posted on my regular portfolio or not. And there it is. So I can show you my portfolio. It finally listed. Thank you, Robin Hood. So let's look at this right here. So now you notice it's part of my portfolio. It's dropped down a little bit here. Now I'm only at 15%, roughly 18 or 16% rather. But nonetheless, these doesn't expire until next week. Okay, it doesn't expire until next week. So I'm gonna hold on a little bit. I'm gonna see if I'm going to sell these or not. I've been doing a lot of option trade lately, and I'm not gonna lie, I've been doing horrible. I think I need a refresher course. I need to refresh myself. But anyway, ladies and gentlemen, that's all I have when it comes to these particular stocks this morning. But nonetheless, good morning, Charles Green. But nonetheless, I will be back on very, very soon. It's going to be a very short video that I'm coming on soon. I just want to bring some things to you guys' attention. So look out for me in the next 30 minutes or so. You guys have a great and wonderful morning. See you guys soon. This is Financial Literacy 101. Learn money and be inspired. I'm out.